Hi everyone, my name is Robin Speziale, and I'm the national best-selling author of Market Masters. Today I'll be sharing with you my speech at the Fairfax Financial Shareholders meeting on capital compounder stocks. I was invited to the Fairfax Financial Holdings Shareholders Dinner this year, 2017. I also gave a talk there on Canadian capital compounders today, 25 market-beating stocks. That dinner was last night, April 19th, and today, April 20th, was the annual Fairfax Financial Holdings Shareholders Conference, as known as Fairfax Lollapalooza. Prem Watsa, who is the founder and CEO of Fairfax Financial, his big day is commonly compared to Warren Buffett and Berkshire Hathaway's annual shareholder conference, which has been coined Woodstock for capitalists. Anyway, I thought you might be interested in my talk, so here it is. Canadian capital compounders today, 25 market-beating stocks. Again, this is a talk that I gave at the Fairfax Financial Shareholders Dinner on April 19th, 2017. The Maple Leafs. If the Maple Leafs were publicly traded on the TSX, they'd be in bubble territory. Too much euphoria and too much downside. I wouldn't buy. But perhaps I'm dead wrong, and the Maple Leafs have been a value stock all these years. Hi everyone, my name is Robin, and I'm the author of Market Masters. Tonight I'll be talking about Canadian capital compounders today. I'm a growth investor, growth at a reasonable price, which means that I'll invest in a company trading at 30 price to earnings if its earnings per share growth rate is 30% or greater, for example. I say this because most so-called value investors would just balk at that 30 price to earnings ratio and move on. And I especially love finding capital compounders, those stocks in the small cap and mid cap space that eventually grow into large caps on the foundation of their exceptional wealth creating ability, fueled by expanding book value per share, earnings per share, and free cash flow per share. The challenge though is finding these capital compounders when they're small. For example, I'm certain some of you probably found Fairfax Financial Holdings when it was a smaller, yet largely unknown company, trading at $175 per share in the year 2000. But most investors at that time were probably thinking about stocks like Bombardier, Loblaw, and CIBC, those large caps with less runway for growth, but more analyst coverage as well as retail investor awareness. But as Peter Lynch said, the person that turns over the most rocks wins the game. By the way, if you did invest in Fairfax Financial Holdings shares in 2000, well done, because you're up 235%, beating the TSX's 64% return over that same period, as well as the performance of those aforementioned stocks. The list behind me, and what I'll post in the description to this video, is of 25 exceptional Canadian capital compounders, many of which I hold in my own stock portfolio. They're all still publicly traded on the TSX. I don't include past top compounders like Paladin Labs, which under Jonathan Goodman's leadership was close to a 100 bagger, 100 times return. In other words, delivering a 10,000% cumulative return. $1.50 invested in Paladin Labs at its founding was worth $142 19 years later. Amazing. And so are these companies. Take a look at the list of 25 companies below. To name a few of these exceptional Canadian capital compounder stocks today: Dollarama, Constellation Software, Alimentation Couche-Tard, Savaria, MTY Food Group, CCL Industries, and Lassonde. It's important to note that you won't see any oil and gas or mining companies on this list. I call companies in those sectors capital destroyers over the long run. They're cyclical price takers, meaning their prospects are dependent largely on commodity prices. To the average stock picker, not all of these 25 companies will be known, but their returns nonetheless have been market beating, all compounding at rates higher than the S&P TSX's long-term 9.8% compound annual return. The average compound annual return among these 25 stocks, 26%, with a range from 10.3% annual compound return for Logistech to 82.4% for CRH Medical. And these figures don't even include dividends, just capital appreciation. I like to think that there's a strong correlation in the long run between a company's return on capital and its share price performance. The average return on capital of these 25 capital compounder stocks is 16%, and that's a 5-year average from the last 5 years. Some of these 25 companies still likely have considerable runway to grow, whereas others don't, because of the law of large numbers. Obviously, a company cannot compound at the same high rate forever. For example, Brookfield Asset Management, which is on this list, is a large cap, $48 billion company. So what are the commonalities of these 25 capital compounder stocks? It would be great to use this knowledge to find the next compounders. I'll first reference Chuck Akra's three-legged stool, the three foundations of compounding machines, as he calls them. This is what Chuck Akra says. The first leg of the stool has to do with the business models that are likely to compound the shareholders' capital at above average rates. Combined with leg 2, people who run the business, who are not only exceptional at running the business, but also see to it that what happens at the company level also happens at the per share level. And then leg 3, where because of the nature of the business and the skill of the manager, there is both history as well as an opportunity to invest all the excess capital they generate in places where they can earn those above average rates of return. So it's an endless cycle with these successful capital compounders. To Chuck's last point, reinvesting all excess capital, we know that CEOs really have 4 choices in deploying capital. They can invest back in their business, acquire and integrate new businesses, buy back shares, and or issue or raise a dividend. Outstanding companies do the first 3 incredibly well. Number 1, they reinvest in the business. Number 2, they acquire and integrate great companies. And number 3, they buy back shares over time. In my opinion, and this isn't true of all cases, but companies that issue high dividends have conceded that they can't deploy that cash as effectively to earn high rates of return. This is true of most large caps. So to conclude, these 25 Canadian capital compounders, which have all beaten the market, are number 1, free cash flow generative, high return on capital businesses. Again, of the 25 stocks, their return on capital is 16%, and that's a 5-year average. They're run by exceptional and shareholder-oriented managers who, lastly, effectively deploy capital to grow their business and continually deliver high rates of return for their shareholders. And of these 25 companies, again, the compound annual return on average is 26%. Some of these exceptional managers in this list of 25 stocks are Larry Rossi of Dollarama, Mark Leonard of Constellation Software, Stanley Ma of MTY Food Group, Alain Bouchard of Alimentation Couche-Tard, and Bruce Flatt of Brookfield Asset Management. But perhaps most importantly, these companies have sustainable competitive advantage, whether that be through the industries in which they operate, their operating models, distribution network, niche product services, regulatory advantages, patents, technology, and brand or goodwill, etc. Not only does competitive advantage allow these companies to compound shareholder wealth for a long period of time, but they have strong and enduring balance sheets capable of funding growth and avoiding crashing in economic downturns. Indeed, these 25 capital compounders seem to have staying power, as their public life is 15 years in the market, with hopefully more years of outperformance to follow. If you want the raw spreadsheet of these 25 capital compounders, I can send that to you. Simply send me an email and I'll provide the file, which includes these 25 capital compounder stocks, their cumulative returns, compound annual returns, return on capital, and number of years on market. And I really do hope you pick up a copy of my book, Market Masters, if you haven't already. It's available on Amazon.ca, Indigo.ca, and in store at Indigo, Chapters, and Kohl's. I'd like to thank Sanjeev Prasad for inviting me to the 2017 Fairfax Financial Shareholders Dinner. Thanks for listening. So, thanks for watching the video, everybody. Please subscribe to my channel for new content. Visit my blog on robinspeziale.com, and there you can click on contact. You can find my email, and if you want, I can send you that spreadsheet of 25 capital compounder stocks. And please do buy my book, Market Masters. All links are in the description to this video. Happy investing, everyone.